If you are looking at car deliveries to value Tesla in 2026, you are losing money. While everyone was arguing about EV tax credits, price cuts, and robo-taxi timelines, a completely different division of Tesla quietly pulled off something impossible. It grew nearly 100% year over year. If you look at the revenue chart for the automotive side, it's a roller coaster of seasonality and interest rates. But if you overlay the energy generation and storage chart, it is almost a vertical line. This isn't just a car company anymore. It is an energy utility disguised as a tech stock. And if you don't understand the energy math, you don't understand the stock price. In this video, I'm going to show you the math that banks like Goldman Sachs and Morgan Stanley are finally waking up to. There is a hidden valuation inside Tesla right now that, on its own, could be worth more than the entire legacy auto industry combined. It's not a theory, it's happening right now. And it all hinges on one specific factory that just hit maximum velocity in Shanghai. Stick around because the price target I reveal at the end of this breakdown is going to shock you. Let's start with the hardware monopoly. You have likely heard of the Lathrop Megafactory in California. For the last 2 years, this single building has been printing money, producing 40 gigawatt hours of storage per year. These aren't just big batteries. These are grid-scale stabilizers that sell for up to $2 million each. But here's the catalyst nobody is talking about. The Shanghai Megafactory is now fully online. That is another 40 gigawatt hours hitting the market. Tesla has effectively doubled its capacity in the blink of an eye to 80 gigawatt hours. To put that in context, this isn't a product sitting on shelves. It is a money printer that is sold out for years. Demand wasn't the problem, supply was, and now the supply gates are wide open. But who is buying all these batteries? It's not just utility companies anymore. In 2026, a massive new buyer entered the chat: AI data centers. You cannot train an LLM or run a billion-dollar AI cluster on an unstable grid. Big tech companies like Amazon, Microsoft, and Google are facing a crisis because solar and wind are intermittent. The sun doesn't always shine and the wind doesn't always blow, but NVIDIA chips need constant flatline power 24/7. The Tesla Megapack is the only plug-and-play solution available at this scale today. Tesla is no longer just solving green energy. They are becoming the physical backbone of the AI revolution. But wait, the bears will tell you that it's just hardware. They say hardware is hard, batteries are a commodity, and margins will eventually crash. They are wrong. You need to meet AutoBidder. This is Tesla's AI trading bot for electricity. It autonomously buys energy from the grid when prices are low, stores it in the Megapack, and sells it back to the grid when prices spike during peak hours. Tesla takes a cut of that profit. This is software as a service revenue. It is high margin, it is recurring, and it scales infinitely. This is exactly why energy margins are climbing while auto margins are fighting to stay flat. So how do we value this? Let's do the sum of the parts analysis. If you value the auto business like a traditional car company, you might assign it a standard PE multiple. But the energy business is growing 80 to 100% year over year with SaaS-like margins. That deserves an NVIDIA-style growth multiple. When you run the numbers, analysts are starting to realize that the energy division alone could justify $100 to $150 of the stock price within the next 18 months. We are looking at a valuation floor that is significantly higher than where we are trading today, purely based on the backlog of battery orders. Tesla is transitioning. The car business pays the bills, but the energy business builds the empire. The numbers suggest we are just at the starting line of a massive repricing. But I want to hear from you. Is Tesla still just a car company, or is it the most undervalued energy play in the market? Drop your 2030 price target in the comments below. To stay ahead of Wall Street with more data-driven analysis like this, make sure you hit subscribe. I'll see you in the next one.